You ever wondered why you're not a millionaire yet? Well, some of the simple but effective habits that we're going to run through in this video are probably the reason why you're not. As a self-made millionaire, I've made plenty of mistakes along the way. I've gone through the bad habits and I've learned the good habits. And in this video, I'm going to run through some of the good habits that I've developed and I've observed from others that are very important when it comes to being a millionaire and actually building long-term wealth. So, welcome back to the YouTube channel. Today we're talking all about the habits, the bad habits that you're probably doing, maybe with not even realizing, that are stopping you from achieving your financial success, from building wealth or becoming a millionaire. So the first habit that we're going to talk about is not paying yourself first. Often said, paying yourself last. So what this means is if you're an employee, a business owner, what happens is you get all of your money in, your salary, your revenue, and then quite simply, you pay everybody else. So you pay your suppliers, you pay taxes, you pay the landlord, you pay the mortgage company. And then what often happens is you have nothing left. And this is why you find it difficult to save and build wealth, is because often there's nothing left over. Whereas what you need to do is you need to reverse the other way around. So when we'll come on to the couple of other points we're going to talk about, but you need to have a target. So for instance, if you want to save £500 or £1,000 a month, then you do this first. You pay yourself before you pay anybody else. If you get £5,000 in, you put your £1,000 aside, meaning that you pay yourself first and everybody else, they get paid afterwards. Now this is good because a lot of the time people spend more money than they earn, and as a result that's why they don't save. But doing it this way around forces you to save money. And then if it gets to the end of the month and you think, okay, how am I going to pay my rent? That's where the frugality comes into it. You might do overtime, you might sell some used items on eBay or something, because you have to become resourceful. Whereas the chances are you're not doing that at the minute, working overtime, selling unnecessary stuff to build your savings, which is why you're not where you want to be just yet. The second point is you're using bad debt. So this is debt which you're using to basically fund your lifestyle for consumables. So there are two types of debt: bad debt, good debt. Bad debt is probably the most common debt that most people have. So it's basically debt that doesn't build your wealth. So cars on finance, credit cards to go on holiday, to purchase new clothes, even getting a new pair of boobs, and doing that on a pay monthly finance option. This is all bad debt because you don't need to do it. It's not building your wealth, it's diminishing your wealth. Good types of debt: mortgages for buy-to-let properties, business loans to purchase businesses. These are good business. This is good debt because it builds your wealth. You basically borrow money, but actually when you borrow it, you earn money from that borrowing. So as a result, your cash flow increases. Bad debt simply reduces your wealth because you're paying out. There's never any income for it to be set against, which is why it's bad. The third is quite simply not knowing your numbers. So by this, you need an income and expenditure report. You need a budget. So what are you getting in each month? Business profits, your salary, overtime, interest, dividends. You need to know exactly what you're getting every month and exactly what's going out. The reason for this is you've probably got a lot of bills that are coming out of your bank account you don't know about, you've probably forgotten about, so you can trim that fat immediately and cut that expense. And also it's important because you need to know where you are so you can know where you want to go. You know how you're going to get there. So having this budget, okay, how much do you want to save each month? How much can you afford to save each month? A lot of people kind of live their financial life in the dark. They just see their bank account, okay, we've got £500, we've got a couple of £1,000 in there, and that's it. They hope for the best. But actually, if you do want to build wealth, one of the best ways to do this, and realistically probably the only way for most people, is to put a plan in place. Look at what you're going to be earning, look at what you can actually save, and put a plan in place. What you're going to do with that money, how are you going to invest it? Because you need to know what is happening when it comes to your finances. Often what gets measured gets managed. And this is very true when it comes to your personal finances. The next is not actually having a financial plan or wealth targets. You're living life literally just clueless, day by day, week by week. You go to work and that's it. You basically go to work, you enjoy the weekend, and then that's it. You kind of keep running day by day, day in, day out. You don't know where you want to get to. You've not got any plans where you want to be a millionaire by the time you're 30. You've not written it down. And this is one of the first things you need to do. If you want to be a millionaire, Great, write it down. That's a goal of yours, and that's something to work towards. And then once you've got that £1 million goal, work backwards. So how old are you now? How much capital do you need to save? What return do you need to get on that capital in order to get you there? What are you saving at the minute? Okay, how can we increase that amount? Can you increase your income and maintain your standard of living so that you can put more aside? This is what you have to work out so that you know how you're going to get there. But the first thing is actually knowing where you want to get to. A lot of people just say I want to be a millionaire because it's quite a common thing to say, but actually this day and age, being just a millionaire isn't enough. Having £1 million net worth isn't going to give you £1 million lifestyle, because that's just not how it works. A lot of homes, especially in the southeast, can easily be £1 million. I've got a house that's worth almost £1 million, and that means nothing. It doesn't allow me to travel, it doesn't do anything, but actually it's a target that a lot of people aim for, but realistically you need to be setting the bar far higher and often having a cash flow target rather than a net worth target. And that leads on to another bad habit which stops people becoming millionaires, and it's basically investing poorly. So maybe saving cash under the mattress, having money in their bank account where it's earning 0.7%. That's no good when inflation is 10% or more, depending on what statistic you're looking at. So actually you're losing money on a year by year basis. Making this mistake actually destroys your wealth. So you need to learn how to invest well so that you can maximize returns and cash flow. As we said in the previous point, wealth doesn't pay the bills. You don't want to be selling your property portfolio or your stocks and shares portfolio to pay your bills. So actually you need to look to be investing for cash flow so that your investments can pay for your lifestyle. Another big financial mistake that I've seen, I'm sure everybody watching this has probably seen people make over the past 5 years or so, is following the crowd. Let's be honest, how many of us invested in crypto just because they heard the taxi driver or their friend make money? About 99% of people that dabbled in crypto lost money. When it comes to finance, investing and wealth, if you hear the barber talking about it, the taxi driver talking about it, everyone at work talking about how they're going to become rich through crypto, they've just purchased these coins, let's be honest, you are way too late in that bubble. And so many people purchased Bitcoin, other cryptocurrencies and lost money because they were just gambling. That's what it is. Investing, as Warren Buffett says, is you use your intelligence because you know that based on the information you have, there's a reasonable probability that it's going to go up in value over a long period of time because you've got statistics and actual information to back that up. Or what I prefer to call investment and an asset is something that's basically going to start paying you cash flow immediately. You know that when you buy a property, it's going to be rented out for X amount, thus it's a good investment. Same with some stocks. You know that when you buy that company, you can look at their previous profitability, their dividend payout ratio. As a result, it's going to continue, most likely, to pay out that same level of dividends and the cash flow. When you purchase crypto or random stocks, you have no idea whether they go up, down, left or right. They're not going to pay you any income in the meantime. So as a result, it's a terrible investment. Well, it's not even an investment. It is a terrible gamble. Now, this is my favorite one, of course. Paying too much in tax. So when you actually look at your paycheck, it wouldn't surprise me if tax is one of the biggest outgoings when it comes to your wealth. The tax man is taking most of your money each and every month. So actually looking at ways to minimize your taxes is going to increase your cash flow and increase how much you can save and invest. And then also when you are saving and investing, you need to be doing it in the most tax efficient way. There are a number of different schemes available. Pensions, should you be investing in a pension? Well, for a lot of people, this can be a very tax advantage way of doing it. Should you be using your ISA allowance yet? Most likely ISAs are fantastic, up to £20,000 you can contribute every single year. All of that grows tax-free and you can put it out tax-free. Should you be looking at seed enterprise investment schemes, venture capital trusts? All of these have significant tax benefits, which mean you can actually pay less tax when you put the money in, often get tax back, and the growth can be tax-free as well, so you can build your wealth even faster. Definitely research the tax advantage schemes because it's going to help you build wealth in less time. Not having a financial buffer. So I read an alarming statistic recently. I think it's about 70% of Americans have less than $1,000 in their current account. And this is a very dangerous place to be because unexpected bills happen, your car might break, you could have a leak in your property, and actually if you don't have that money set aside for these rainy days, that's going to push you to basically use bad debt. It's going to push you to get a high interest credit card or an overdraft to plug that void. So definitely have a buffer. Typically 3 to 6 months is a good amount of core expenses to have personally. So all of your outgoings, mortgage and rent, car finance, shopping, food, groceries, the lot, you need to have that aside. So if you need £1,000 a month in outgoings, aim to have a minimum of 3,000, ideally 6,000, set aside in a completely separate account just for those worst case scenarios. And if you're the sole breadwinner as well, consider what insurances might be beneficial, such as income protection insurance, just in case you did lose your job. So this is a massive one. This, out of all of the things that we've gone through, this is probably the biggest mistake and the worst habit that I see people make, and indeed I myself made for a number of years when it came to stopping me from becoming rich, becoming a millionaire. And it's not investing in yourself and not increasing your earnings potential. So actually the amount of money that you can earn is unlimited. But so many people just stay where they are financially. They don't do any extra training. They don't see how they can add more value to their employer or their customers and their clients. So their income flatlines. If they're earning £100,000, that's where they stay. Whereas actually, when it comes to building wealth, there's only so much you can save. You can't save yourself to become a millionaire if you're only earning £20,000 a year and you're spending 15 of it on just basic living expenses. But you can do that if you can increase your earnings potential to £100,000, £250,000 a year and keep those living expenses a lot lower. So absolutely see how you can make yourself more valuable so that you can earn more money, because really that's the only way to become rich. You can't save yourself rich, but you can earn yourself rich. And then the last one, discipline and commitment. So everything I've gone through here, quite often people might start to save. They might say, okay, I'm going to focus on myself. I'm going to do this new course, which is going to get me a pay rise, which is going to allow me to start my new business. But then after a couple of days, they lose the motivation. They don't stay disciplined. When it comes to building wealth, it's not done in days, it's done in decades. It took me the best part of 6 years in business before that millionaire status was achieved. So you can't think that you're going to get rich within 6 months and then if you're not, give up. You need a long-term financial plan. Success takes time. There's no such thing as an overnight success. Okay, you need to develop the discipline, the money mindset. This is why I think some 80% of lottery winners go bankrupt, is because yes, they might get the money, but they don't have what it takes to keep the money. And this is what you need to develop. If you actually want to get money in the long run, you need to develop those money skills when it comes to saving and reinvesting and living below your means to build the money initially and also to keep it. So you need to stay disciplined and you need to stay committed to your long-term financial success. I hope this video was useful. If it was, do make sure you give it a big thumbs up and send it to anybody who you think would benefit. But that's all for today, guys, and see you next week. Bye for now.